Alright, once again, good morning. Uh, Today I just wanted to quickly point out some trades that I did take yesterday before we zoom out to a macro level. So the first one I did execute on was at 2 p.m. We had this fair value gap, which is also a BC, a buy side imbalance, sell side inefficiency. When I saw price dip back into it and covered it completely on a 1-minute chart, it was a clear indication to buy it up. Of course, all these other fair value gaps also are significant because this one is the 5-minute one, and we should always be able to identify where price was headed to before 2 p.m. so that by 2 we can engage on the market. So this is a 5-minute chart and this was 155. So obviously at 2 p.m. we're in this major fair value gap and we're looking for a BC to be formed on the 1 minute or 3 minutes, and obviously to target buy side, which in this case is right here, which also was a confluence for this new week opening gap from the 28th of April. And we saw price deliver beautifully. So that was on the first part. The next part of it was next part I was watching out for, because this wasn't my final target. My final target was the volume imbalance, which is all the way up here, this volume imbalance on the weekly chart. But obviously my first target was this white line, which you will see in a moment. But this white line is the buy side from the daily chart. So anyway, I delineated the last macro of the day, which is from 3:15 to 3:45. I saw price continuously rally up and then a fall off. So I assumed that this fall off was going to bring price back to the new week opening gap one more time to just tap on it. I assumed, and I was actually going to enter some more long positions and then carry it to the upside, but price never really did come back to this level. It did tap into this little fair value gap right here, tapped exactly inside of it, and then pushed up from there. So that was what we had. I can take these lines off now. I just wanted to quickly show a few things that I was looking out for. I'll also have to clear these fair value gaps and all these illustrations that have been plotting on the chart the whole time. Let me show what I mean by this white line. It's this tip of this candlestick right there, which we can see on a daily chart. Looking up there, it's the buy side on a daily chart. So looking at price now, well, that's the first thing done. The second thing is I realized that I was looking at the continuous contract for the S&P 500. So basically when you type ES for the delivery for the month of June, which I know is M for the year 2023, you get this, right? So I double clicked on this and that's how I got the ES futures contract right there. But what I didn't notice was that I could have put specifically for this exact month of June, instead of the continuous contract, which you can see this has June 2023 in it, this one doesn't. So I decided to add that to my watch list over there to see what the difference is, because this one is more real time. This is actually for this month of June that's happening. It's expiring, I believe, 15 June, if I'm not mistaken, but that's when I think it's expiring. So when we check on this one, on the other hand, and check the daily chart, we can see a very different picture. We can see something completely not the same. And this weekly volume imbalance is obviously a lot more significant than the continuous contract, because yes, you can say on the ES that we're targeting the weekly buy side because that's technically the same frame. The volume imbalance that we just tapped into now on the weekly chart is already about 25% covered, so it's almost seeming insignificant at this point. But when you look at the June contract, it seems like we still have a way to go. We still have this buy side to clear, so I have to now transpose all my analysis to the June contracts, because I also realized that when I was looking at NQ, I was looking at the proper one, I was looking at the June contract of it, but then when I was looking at YM and ES, I was looking at the continuous contract. So I'll have to redo that. I just thought I should put those things out of the point those things out for later. I'm probably gonna record a video, a time lapse of some sort, while I'm doing my analysis for these ones and rearranging my list, because my lists are alphabetically ordered and everything, except for these last parts because they're experimentals. So I'll have to sort those out later, but let's continue using this chart for now, since I've already started using it. I'll move into next week using the proper one. So we can see that we tapped into this volume imbalance for the weekly, and that was not my target. My target was this buy side right here. I was going to use this one, but I realized this one was slightly higher, so obviously if price could get to this, it's probably going to rally through this. So that's the logic I used and hopped on this one. Looking at where price could go to next, I am honestly seeing this volume imbalance to be completely filled and potentially get to this other block right here, this last green candlestick before a fall off. I'm not sure if the buy side will be taken yet, but I'm expecting this one to be tapped into, this green. And today is Friday, last day of the week, and we have FOMC, so I'm expecting a high level of volatility in the market. I'm not sure how it's going to take it, how it's going to move the market, but it's clear where the direction is, where the bias is, which is obviously buy side now. We've taken out all these equal highs and we've broken out of this range. We should expect price to rally up. And I did point out yesterday that if you were looking for an entry, you'd be someone looking for a market structure shift. Look for a fair value gap in that market structure shift before you can take price to the upside. If you were somebody looking that missed it completely and you're trading on a daily chart. So that's that. Going down to the 4 hour, with the assumption that you're looking for a buy side entry, you're looking to take price to the upside. Let me change this thing back to the technical. I just realized it was still on real time price. Let's assume you're looking for an entry to the buy side. How would you have done it? Well, firstly, let me clean up my chart a little bit. Let me just, yes, this. So now that we have a little bit of a cleaner chart on a 4 hour perspective, everything should be clearer. So this white line, I think I can remove it now. Well, I'm just gonna leave it for the sake of reference in for future videos. Let me just put it there as the buy side, and of course we have these multiple daily fair value gaps. This one right here is a major one at the bottom of this range, so I don't think we'll be tapping into it anytime soon, but it's again for the sake of future referencing, I leave it there, because if we ever see price fall off and wondering where price is headed to, we can obviously pay attention to this fair value gap and pay attention to these relative equal lows, and most probably going to get price propelling off of it. So that's why I left it there. On the 4 hour, we have this moving into FOMC and catering for the fact that we only have today left in the week. I would like to see price, since we already broke out of this range that we've been in for a while, with a massive imbalance, with a massive candlestick to the upside. We traded into this other block, we traded into this fair value gap also on the daily chart, and used that as a support to push higher, and this being an IO Fed, because it just tapped into the fair value gap, just tapped. So it's one of those fair value gap entries that doesn't even get to the 25%. Sometimes it doesn't even get to the 10% of the fair value gap. It just propels from there. So now that we've gotten this type of market move, and according to the continuous contract, not the June's contract, according to the continuous contract, we're just about to tap into its weekly volume imbalance. We haven't touched it yet. So I would like to see price trade a little bit lower, probably into this other block. This other block is the last red candlestick before an explosive up move. That's an other block. So this one right there, I'd like to see price tap into it. It might be the 50% of it, it might be the 100% of it, it might even just be at the entry of it, but I would like to obviously see 50%, which also co-aligns with the daily fair value gap that we have. So this daily fair value gap moves in with this bullish order block. So I would like to see price fall off to this level and finally shoot up, covering the weekly volume imbalance. So it might not take out buy side, but I want to see this volume imbalance on the weekly chart, on the daily and weekly chart, to be filled. This one right here. Not sure what this is though. Okay, I see. So this, I think this range right here is a higher time frame fair value gap. Probably a monthly. No, it's even higher. This is surprising. Not sure what those levels were meant to be. Oh, those are the entries of other blocks. So I was delineating the fact that we have this other block that was pierced through, and obviously this one as well on the monthly chart. But I don't think price is going to respect any of it. And I'm not sure why it was showing on the 4-hour chart either. But since I'm no longer going to be working with this chart, and I'd rather be working on the current month's contract chart, I'm going to get rid of those. I know this video isn't scripted or anything, and I know that there's a lot of empty spaces, but I'm not going to bother myself editing it, because this is supposed to be a chill analysis. So that's what I'm expecting. I'm expecting price to fill up this volume imbalance and potentially take out this buy side. Potentially. If I see price fall off drastically, speedily to this, I'm definitely going to have orders set at this level, aiming for buy side. I might not get it, but I'll be aiming for it. So when we fill up this volume imbalance, I'm taking off majority of my positions and conclude my week there. Fill up the volume imbalance, conclude the week by taking out majority of your positions and moving your stops to break even. I say this because if we're aiming for buy side on this, on the continuous contract, then reason would say that we're aiming for the weekly volume imbalance on the non-continuous chart, because it's just as wide. If we look at this, this is the weekly volume imbalance, and we just tapped into it. We also haven't taken out this buy side right here. Sorry about all those notifications. I'm probably gonna make this video unlisted now. But yeah, so if we target in this, if we target in that, then reason would say that we can target the same thing on ES, because this comes into the other block, takes out buy side, short term buy side, or we get this comes into the other block and takes out and completely fills the volume imbalance. So if we can see this type of expansion move here, then of course on the continuous one we should expect somewhat of the same, if not more. So that's why I'm taking off majority from here, which is a lot, because this is a 4-hour chart. From here to here we've got about 50 handles, so that's a lot of move. But yeah, that's what I'm looking for today, concluding the week.